This is Capital and Counties Property, or Capco. It's a London-based property company with core assets focused in the central London district, which I haven't visited in a hell of a long time, but I know Rowan has. That's Earls Court and Covent Garden. And then they've got associated properties. So here you're talking about landowners that have to redevelop or have the opportunity to redevelop retail and other assets in one of the most valuable, square couple of kilometers of property anywhere on the planet Earth. Market capitalization, 60.6 billion rand. Current yield exceedingly low. I think they distributed like 1.5 pence, and they've got a share price of £3.25 or something. So Rowan's going to explain in a minute for us why it is that yield is so low, 0.44.
Yeah, so this really it's pure play London property, and even in terms of those two key assets. So really you've got to take a view. If we look at the share price graph, I guess this really in terms of the Brexit, which we've been discussing, they're sort of at the sharp end of the stick there, and really the share price.
You've been in London more recently, so just tell me, what is it like there? What are these properties like?
As you say, I mean, they're irreplaceable, the actual properties and the space that they occupy. So clearly very valuable from that perspective. I think London has a lot of potential. It will continue, obviously, even if the UK is not part of the EU, but in the short term that clearly would have an impact on the growth. And really they focus on capital appreciation, capital growth of their properties, so less of an income producing asset.
Yeah, that's why. So it's sort of more like an asset under development.
Correct.
Because again, I went to Covent Garden like 3 decades ago, but it's like these old buildings, right? And you can't just take a wrecking ball to the exterior. It's like a double national monument or something. But what they do internally is that they rejig the space and they put up like girders to keep everything, and then they turn it into an Apple store or something inside.
Yeah, so
and
it's
top rents and so on.
Destination shopping. They've actually again done very well. If you look at their rental revisions and the lease renewals and the new leases, up 10% on the previous year. So it looks like the underlying retail sector, the UK and the London retail sector, is actually very buoyant and very strong. So that's a lot of support. I think we need to get this Brexit thing out of the way, and then I think you could see these shares move from these levels.
Look, the reason that Tory government in the UK had to do this was because it was a compromise that Cameron did in order to stop his mad right wing from defecting to UKIP.
Exactly.
And to that madman, what's his name? I forget, Farage.
That's right. Yeah.
So now this is like a political compromise, but they want this thing to continue, and they think they can do, because the pound remains the independent currency and all that.
Yes.
You've got to be part of the EU, otherwise you're going to have to put up the border posts again and have special visas and stuff.
Yeah, they basically through this process are extracting quite significant concessions from the EU, which I think will satisfy the electorate. So it's maybe a clever gambit in a way. They will remain in the EU on their terms, essentially.
Okay, one just final comment or question about London properties. What do you make of this thing that there's a lot of hot money in London property because it's Russians and Cypriots and people that have got problematic regimes at home? So what they do is they take their money off and they buy a London property because it's been protected for 300 or 500 or 600 years or something. Is there a concern that maybe London property is a bit of a bubble?
So it's certainly a strong underpin, and I think London is such a unique city that it will retain that sort of attraction and aura. So it could, I think, in the short term, I think the Brexit in particular, because of this sort of this unique situation that it has, it could harm the property values there, but I think it will quickly recover.
Okay, so what about this one? Not a big yielder, not a big payer. You're not going to get huge distributions. Share price has been a bit wobbly because of these recent dilemmas. The currency issue comes into it. But
I see it as a buying opportunity in pounds. It again has done quite poorly, so it's at a very low level. And if you like the assets, you like London, these are iconic properties to own.
Great website and great reports with fabulous pictures if you're interested. Okay, yes, so we're going hot on Capco, 2 of those.